Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities trended positive for the third consecutive week on region-specific developments. Major US equity indices clocked gains for the third week, supported by a rally in growth stocks and robust economic data despite a slowdown in home sales. Asian equities trended mixed amid continued foreign investor sell-off from Chinese and Hong Kong equities as Chinese economic indicators, which included money and credit data, industrial production, and fixed asset investment, all came in below expectations in May, even though retail sales continued to remain upbeat. On the other hand, strong foreign inflows into Korean and Taiwan equities continue to drive successive weekly gains in these markets. Back home, Indian equities gained for the third consecutive week. The Nifty index rose 0.2% for the week, driven by robust foreign investor inflows, which helped dominate the mixed trends in global equities and a slower start to the monsoon season in India. Broader markets outperformed the Nifty index, with the Nifty Mid-Cap Index up 0.4%, while the Nifty Small-Cap Index was up 1.1% for the week. Among sectors, banks and IT led the winners with gains of over 1.7% for the week, while FMCG and auto led the losers with cuts of over 2.2% for the week. The Indian fixed income market had another decent week, government bond yields declining across the curve, shorter maturity yields fell sharper as RBI conducted repo operations for INR 1 trillion to ease liquidity conditions, while strong demand at the RBI's weekly auction for INR 330 billion saw medium and long maturity bonds settling at lower than cutoff yields. The 10-year Indian government bond yield fell by 1 basis points to close at 6.97%, while the 3-year and 5-year Indian government bond yields fell by 1 basis points and 4 basis points respectively. The INR closed the week flat at 83.54 per dollar as the impact of rising crude oil prices, higher demand from domestic importers, and stronger US dollar were balanced by improving foreign investor inflows into domestic equities. INR gold rose 1.2%, Brent crude oil rose to a 7-week high, up 4% for the week to close at $85.6 per barrel, as investors balanced signs of demand improvement, falling US inventories, heightened geopolitical tensions against a stronger US dollar. Coming to macro updates, not much this week except for the release of June 2024 RBI's Monetary Policy Committee meeting minutes. In its June 2024 Monetary Policy meeting, the MPC members had voted with a 4:2 majority to keep repo rates unchanged at 6.5% and retain the monetary policy stance to focus on withdrawal of accommodation. Both dissenters were external members. The RBI governor remained optimistic on growth, emphasizing a recovery in agricultural activity and rural consumption on the back of expectations of above normal rainfall. He remained cautious on food inflation in the near term given the hot weather conditions in the country and continued to highlight that strong growth momentum has given monetary policy space to focus on inflation. Deputy Governor Patra highlighted that domestic demand remains strong, while on inflation, he continued to highlight that food price inflation is hindering a faster alignment of headline inflation to the target of 4% and argued that monetary policy needs to remain vigilant to avoid spillovers to other components of inflation. External member Dr. Goel highlighted that real policy rates in India is currently restrictive at 2% and would continue to remain so should the policy rates remain unchanged in fiscal 2025, impacting growth with a lag. She voted for a 25 basis points rate cut accompanied by a change in stance to neutral. That's it in this edition of the podcast, and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.